All right. Mohammed, can you hear me? All right. Okay. So it is 11:57 a.m. here in New York City, and we have 3 minutes to start our webinar. So we are getting more and more people attending the webinar and looking forward to having a fabulous session today. So from all the attendees here, okay, we have 2 minutes, letting more people to attend, and we will start. So. One minute to go, and I do want to take a look at the fundamentals today before we go into the technical analysis for the topic of this webinar. Today we had a huge news out from the major banks in the US and the UK and Switzerland that they have been manipulating the Forex rates apparently, and they are facing billions of dollars in penalties. And I'm wondering who is getting this penalty money? The governments, not the traders. So I'm actually pretty upset. I was hoping that the money that they're going to pay for fine would go to the traders like myself who has been actually manipulated by the banks. But I don't think that that's going to be the case. Nonetheless, even though these banks are going to pay this $3.2 billion to the regulators, this is probably going to be less than the collective profits that they have been making through the manipulations. So it is a tricky business, and Forex is obviously the largest market in the world, and when you're big, you got to be careful how you use that power, right? You want to be Superman, not like these banks. Okay, it is 12 o'clock, 12 p.m. here in New York City, and I am believing that we have attendees from all over the world. I would like to go ahead and check the mic and speakers. Can you please type in a Y if you can hear me? All right, great. We're getting yeses. We are going to have an amazing session today with me, Kiana Danielle. And let's get things started. So today's agenda is, first, as always, we're going to have an introduction of Orbex, of what this webinar is going to be about, of Investiva, myself, who am I, right? Because a lot of you might be new to this webinar, and we want to make sure that you feel comfortable with who I am. Do you want to even listen to me? You're going to find out in about 5 minutes why you better listen to me before you get to trading, and if you really want to make money in the Forex market. And next, we are going to have an introduction about the Forex market for those of you who are beginners and are not quite yet familiar with all the terminology in this industry. That's not going to take long, but today's focus, as promised, is going to be continuation chart patterns. We are going to introduce to you 6 major continuation chart patterns that can help you with setting your stop and take profit orders. And obviously, if time permits, we have only 1 hour. We are going to go live to the live charts and try to discover current continuation chart patterns that you can take away from this webinar at the end and go ahead and trade based on our discoveries. So that is going to be obviously our most interactive session of the webinar, and it's going to be very exciting. Once again, I definitely want you guys to interact with me during the webinar, and if you have a question, definitely don't hesitate to type it in. I see all of your questions. I see all of your hellos and all of your whys and yeses right now. Thank you so much for participating. It definitely makes me feel better than just talking to myself and not knowing if you're listening to the webinar while you're going through your Facebook or you're just having me in the background. So when you interact, I actually know that you're there, and it actually feels like a good classroom that people are learning something. So other than your chat box that you are right now telling me hello, hi, thank you, hi Mohammed, how are you? Please get yourself prepared and get a pen and a paper to take some notes. You are on your computer. If you have double monitors, you can obviously have a Word document open and take notes. If you want to take screenshots of the webinars, you can easily use the snap gadget, snipping gadget, on your computer. If you're a Mac user, I don't know how you can get a screenshot, I guess, by pressing some buttons. I'm not a Mac user, so I don't know about that. But definitely do take notes, and let's get to the introductions. You're obviously already familiar with Orbex. We did talk about Orbex library that launched last week, which is pretty exciting. It's a combination of videos, ebooks, blogs, trading analysis, up-to-date markets, trading tips, fundamentals, news, and all that. All you have to do is to type in orbex.com/blog. If you need market updates, you can find them there. If you need education, you can find the education videos, which are actually presented by myself. So if you want to know more about me, and as well as learning Forex education, definitely check that out. It's pretty awesome, very fun and interactive. So that's it for Trading Library, and definitely subscribe to their mailing list. It is pretty awesome. They give you market updates throughout the day and give you tips, which are pretty useful for any Forex trader. A little bit about me. Then I want to hear about you guys, or maybe I'll hear about you guys, and then we'll go to myself. Type in a yes, type in a Y if you have never traded Forex before in your life. That includes demo accounts, that includes live accounts, that includes actually not including trading Forex in the exchange counter in the airport. Okay, we have Mark, who has never traded Forex before. That's fine. We're here for you. We're going to teach you how to get started. Well, myself, I had never traded Forex before. About 6 years ago, actually. I was in college in Japan. I'm not Japanese. I'm Persian. But I went to Japan. I was studying electrical engineering. Yes, I'm a girl. I studied engineering. It's a male-dominated industry, I know, but so is Forex. And I was there, the only girl in my class, and I was pretty bored, to be honest with you. So I started getting to know I wanted to make money while I was bored in the electrical engineering class, and I knew at my heart that I'm not going to be an electrical engineer in the long run, and I wanted to make money fast. And when I was talking to one of my Japanese friends, a woman who was hosting me, my Japanese host family, she trades Forex, and she was telling me that in her free time, she trades Forex and make a lot of money. So in 2008, together with her, I sat down, and I learned Forex trading, and I made my first trade that changed my life and made my first introduction to the Forex world. And while everybody was losing money during the crash in 2008, I doubled my money in less than a month, and it was great. And I knew that this is what I'm going to be passionate about and what I'm going to focus on after that. So after I graduated college in Japan, college and master's degree and graduate, yeah, I did study for 6 years, which is ridiculous. And I just switched. I switched to finance. I decided to come to New York, which is the heart of trading, is the city that loves to trade. And I came here. I started working for the major brokers and banks and TVs, and I became an analyst. I wrote a book. I got published by McGraw-Hill, and it has been a very exciting route for me. So I trade every day in the mornings. I'm excited because I know that there is going to be a lot of opportunity for me. And in the meantime, while I'm waiting for my trade to take place, I educate my peers, my followers, and it is a great community that we have in Investiva, and it has been a great journey. I do have to mention that I do have a cold right now, and it has been very cold in New York, which has actually led into some oil price changes, which has not been good. Yesterday, this New York weather has been getting this polar verdicts, I don't know how you call it, and the oil prices have been going up, which actually does interfere with U.S. dollar as well. The lower the oil prices go, the U.S. dollar rises. I'm sorry about that background noise. People just do not listen to you when you tell them not to call. Anyway, so that's about me. I do have a cold. Sorry about my harsh voice. And let's get started to what is Forex. Forex, as a lot of you might already know, is the largest market in the world, is much better than stock market, in my opinion, because there are thousands and thousands of stocks, and you have to follow in different countries, and you don't know where to start. But with the Forex market, there are hundreds of currencies, obviously, that you can trade, but the ones that are mainly traded on a day-to-day basis on the Forex platforms, especially Forex or other platforms, are 7 major currencies, and you have the combination of Euro, Swiss franc, Japanese yen, Aussie dollar, British pound, New Zealand dollar, Canadian dollar, and you combine them with the US dollar or mix and match between other currencies, these major currencies, and you got plenty of opportunities just by following the 7 majors, which is great. And another great point about Forex is that it never stops. So for example, if I was a stock trader, I would not be here sitting doing a webinar for you guys because I wanted to take the most out of my day. But you know what? When I'm a Forex trader, I know that I'm going to be able to trade even after hours. I'm going to be able to trade if I'm having an insomnia because of my cold tonight. So it's great. It doesn't stop until Friday afternoon in New York, and it starts actually Sunday night in New York, which is the start of the trading day in Australia and Philippines. Another major advantage of Forex market, Forex trading, is that it moves in cycles. Stock market either goes up in the long run or crashes, right? The companies, they either do really well, like Apple or Google, or they are out of the radar for good and they crash. And the Forex market, because it's so huge, is $4 trillion worth of transaction per day. Therefore, it can never crash. I mean, it might crash at some point if something really disastrous happens to the world, to our planet Earth, but it moves in cycles. So if you are a long-term trader, you can basically always manage to not having a losing trade, which is, but you have to basically know how to do it. That we are going to talk about it right now. And another thing that I want to quickly mention right now is the high leverage in the Forex market. That is a blessing and not a blessing at the same time. If you're using high leverage, you're going to be able to multiply your profit by maximum $500, 500 times. I believe Orbex actually does offer that in specific countries, and you have to understand that this high leverage, even though it sounds very tempting, and myself, I use it all the time as well, but you have to understand that you multiply your losses by the same magnitude, and if you're in a losing trade and if you haven't calculated your capital properly, you are basically going to lose a huge amount. So we probably are going to have a seminar or webinar just about leverage later on, but for today we're going to talk about the chart patterns and how to make money just based on the charts. And as I said before, the Forex market moves in cycles, right? And the beauty of it is that you can make money on the way up. You also can make money on the way down. Because you're trading one currency versus another currency. So if you are trading euro dollar and you are bullish on euro dollar, bullish, by the way, for those of you who are not familiar, means thinking that the market is going to go up. So if you're bullish the euro dollar, that means you're bearish the US dollar, right? And therefore you can also be bearish the US dollar at the same time. So it's a double-sided coin, the Forex market. And for technical analysis, we have said before, technical analysis is basically taking a look back at the history of the price actions in the market, right? So basically, the fundamental idea behind technical analysis is that the market repeats itself and it has tendencies to do the same thing as it did before, right? So even though it doesn't happen in an identical format, oftentimes you can predict the future by understanding the market psychology. And this market psychology is printed out on the Forex chart. As you can see in the Forex chart, you have the time and the price axis. The time goes to the right, the price goes up. It's exactly like a stock market platform. And here is the price action. This is the euro dollar chart that we were talking about before. And as you can see here, the market is generally, for example, going down. There are different types of charts. Different people use different formats. Previously, it was only the dot charts available, the line chart that shows only the closing price of the market during each session. So this is a hourly line chart. Each of these red dots, I'm not sure if you can see it, but each of these red dots basically shows you the closing price of the market at the end of an hour. And when you connect the dots together, you get this line, and you can see if the market has been generally going up or has been going down, or what's going on and what the patterns are like, right? Then we have the bar charts, which shows not only the closing price, which is the right angled. It's pretty small over here. You don't have to see it because most people don't use bar charts anymore, but it also shows the open price of the market during that 1 hour or specific time period. It also shows the range, and it does have a color. The green color or the blue color usually shows that the market range has been generally up. The purple color or the red color shows that the market has been generally going down. And then we come to my favorite kind of chart, which is the candlestick chart. It is the most recent form of charts that a lot of platforms, including Forex, use them. And the beauty of it is that it's more visible, right? And we're quickly going to go through it. So if you see, usually the markets have set the colors for the candlesticks. So blue or green or white usually shows the bullish price and shows that the markets generally went up the price. As you see, it opened over here, it went down, it went up, and then it closed over here. Then for a bearish candlestick, we have the color red or purple or I don't know what other colors people use, but also black, which shows that the market generally, the prices went down. It opened at this price, it traveled to this high, to this low, and it came back and closed at a lower price over here. And you can see the combination of all these candlesticks in a chart. And now we're going to identify patterns based on candlestick charts. As I said before, so you can have different time frames for your charts, right? You can trade on a 30-minute chart, you can trade on a 1-minute chart, which basically shows each of those candlesticks. On a 30-minute chart, for example, shows the price action. You see this one, for example. Let me change my spotlight over here. So this candle over here, for example, or this big one, you see this huge bullish candlestick. This shows the price action in 30 minutes. This candle was built in 30 minutes. At the same time, we can basically zoom out and have a 4-hour chart. Each of these candles were built in 4 hours, right? So now you get a more macro view of the market. And if you're a longer-term trader, you can go back to a daily chart. So this candle was built in 1 day. If you zoom back to 30 minutes, like this 1-day candle is made of all these candles in a 30-minute chart, right? It's basically like your clock, right? So you have an hour, you have minutes, and then if you divide it furthermore, you have seconds and you have milliseconds. So that's basically what happens in the chart, and you can have different formats just to get a better opinion of the market direction. And it also hugely depends on what kind of a trader you are and whether you want to trade based on a daily basis. If you're a day trader, if you're a scalper, you want to go on a 5-minute chart and you want to trade basically each and every candle and all the price actions. If you are a longer term trader like myself, you want to go to a daily chart or even a weekly chart and you close and open your positions and you let it be and you make money afterwards. So that's about the time frames. We are going to jump into the continuation patterns, right? Last week we have reversal patterns, last webinar. Today we're going to talk about continuation patterns. So what does it mean, continuation pattern? A lot of you, type in a Y if you have heard of this. Trend is your friend. Yes, yeah, Maria has heard of it. That's great. So the trend is your friend. Sometimes the trend is just going up and everybody can just get on it and make money on the way up or on the way down for that matter. But sometimes we have a pause during that uptrend. So the market is going up, everybody's excited. But then it hits a pause. This pause usually is visual to us on a chart by a continuation pattern that we're going to talk about. And after this pause, more often than not, the market just continues in its previous direction. In our previous webinar, we talked about reversal patterns. The reversal patterns are also a pause in a market trend, right? So the market was going up, then we saw a pause, and then the market actually changed direction. So this became a top of a market, right? But today we're not going to talk about reversal patterns. We're going to talk about continuation patterns. And continuation patterns in any market can work in both a downtrend and an uptrend, right? The markets have only three directions, right? It's either going down, it's going sideways, or it's going up. When a market is going down, or this pause, it also is called a consolidation. So the market is just indecisive. They don't know where to go. And that is when you want to identify and be sure of the next market trend, direction. So the most famous continuation patterns, or these pauses, are these three: the triangles, the rectangles, and wedges. I know that in your email you received 6 continuation patterns. The 6 continuation patterns, we're definitely going to deliver them. It's basically the sub patterns of these 3 major ones. So without further ado, we are going to take you to the patterns themselves. But let me tell you this before we actually get started. The continuation patterns, even though more often than not they are a pause within a trend, sometimes they actually turn out to be reversal. So that's why we have to be very careful and do not jump in. Once we identify the pattern, take this note. Write this down on the paper that you have hopefully on your desk. Write it down. Do not be greedy and do not jump in on a trade when you identify a continuation pattern, because a lot of times they can be reversal. And we are going to cover how to identify a continuation pattern. And if it's a reversal, it's also good because you can get into a reverse direction of the market and make money on the other in the other direction, right? You can make money in both ways. So that's good. So let's start with the triangles. Let me be clear here. This is a triangle. We can see it, right? We have 3 different types of triangles. We have the symmetrical triangle, we have the ascending triangle, and we have the descending triangle. Just to be clear, this over here, this is the market price. And then these are the lines, these are the imaginary lines, or the lines that we draw on our platform. I am going to take you through it, how to do it. But this is not a part of the chart, right? This is the chart, and this green line is the pattern that we identified. This green line as well, and that green line as well. Let's take it step by step. Let's start with the symmetrical triangle. It looks like a slice of pizza. Okay? So you want to have this visuals. The reason why I use the visuals is because you want to have something in the back of your head so that you don't miss the pattern. So if you basically connect a symmetrical triangle with a slice of pizza, chances are you're going to identify it on the pattern on the chart a lot easier. So as we said again, here we have the price action. We noticed a zigzag movement of the trend, so we draw a triangle pattern, and then the market broke out and we had a continuation pattern going on. So what happened over here? The reason why we had this pause, you see the market was going down, then we had a pause over here. The reason why we had this pause is because neither the buyers or the sellers, the market makers, people who are participating in the market, they are not able to push the pair, the currency pair, or any other market for that matter, in their directions. So the bulls and the bears are basically fighting over here, and they're trying to come up with a conclusion and decide the next market direction. And us, the minor Forex traders behind our screens, we are going to identify this pattern, this market psychology, and get on a trend. So symmetrical triangles, they are the most popular triangles, but they're also the most tricky ones as well, because symmetrical triangles actually they are more likely to be a reversal. Okay, so that's why it's very important to make sure that it actually is a continuation pattern. More often than not, the symmetrical triangles work best as a continuation pattern when the market, when the prices break out of the triangle on a half of the triangle that we draw. You see, so we have a half over here, half over here. Here's where the market, here's where the triangle started, right? And the pair dropped out, broke out of the pattern somewhere between half and 3/4 of the triangle to its top. So this is usually a good indication. If it goes like over here, still be over here, we didn't have a triangle to begin with. But if it goes like further down to the tip, then sometimes it actually is trickier and we might see a reversal. So keep that in mind. So basically, as the two lines of the triangle get closer to each other, the traders like you and I, we get more excited because we are waiting for an explosion of the price action in either direction. And we want to make sure which direction the price is going to shoot in so that we can take advantage of it and make money, right? So how do we do this? Let me go back to my normal. Oh, we have a lot of, okay. So here is a symmetrical triangle drawn in a candlestick chart, okay? I believe this was, yeah, this is the dollar-yen candlestick chart. So I noticed basically over here a downtrend. Then we saw this pause in a downtrend. It's the zigzag movement. Okay, so basically I drew these two lines and I noticed that it looks like a slice of pizza. It is a symmetrical triangle. So what did I do? I waited for a breakout, and the breakout actually happened very fast. It happened right over here, right? But I didn't jump into the conclusion over here. I waited for the market to confirm an opening below the lower boundary of this triangle. So around here, when the market opened lower, I was sure that the market is going to actually go down and the pause has been dissolved, right? So I jumped into a bearish trade right around here, and I made money up until here. So usually, again, we are going to talk about this a little bit later, but after a symmetrical triangle, you want to stop your, you want to take profit somewhere around, the market usually goes down the same amount of the opening of the triangle over here. So it goes down like up to around here. But sometimes it even goes further down. That comes out, that analysis, you can do that analysis by mixing and matching with different other tools of analysis that we have talked before, you know, Fibonacci and key resistance and support levels. But more often than not, the market moves down the same amount of the opening of the triangle. Okay? So, excuse me. I am going to give you another example of a symmetrical triangle over here. This is more vivid, right? The zigzags are more visual over here. So the market was going down. This is the weekly chart, I believe. You see, is the candlesticks are made in a longer period of time. You have February, March, April. So this is a very long-term pause in the market trend and is perfect for the long-term traders, right? So the market was going down, and then it hit, you know, point A, and then it hit point B, and then it hit point C. At this point, a trader and a technical analyst would have identified the triangle, and they would draw this triangle, right, and wait for the market to continue the zigzag and eventually confirm, right? So let's take a look at point E. Even though the market teased above the upper boundary of this triangle, it did not confirm above it. It didn't open above it after teasing over here, right? And then it changed direction and actually came here. So look at this candlestick. We have had a webinar on candlesticks before, and the candlesticks can be very revealing when you want to come up with the direction of the market. So we had a bullish engulfing over here. You see, it was a very powerful bullish engulfing below the triangle, and then we had a series of bearish candlesticks, and around here a trader would be certain that the pause is over, the triangle is confirmed, and this is a continuation pattern, and the market is going to go down. And as you can see, the market went down almost the same amount. Well, it did go down even more, but you don't want to be too greedy and not make money, right? So you want to set your stop, your limit order somewhere around the same amount of the start between point A and point B. So right around here, I would get out of the market and don't risk the market to change directions again, because you can see, like, afterwards you never know what's going to happen because the market jumped into a pause again, right? So that was it for symmetrical triangles. Next, we're going to take a look at two other different triangles, which are actually easier to identify, and they are most likely to be a continuation pattern. They are the right angle triangles. And yes, I know that this is funny. You're like, okay, what is this cake doing here? The cake not only is delicious, but an ascending triangle is like this rising cake. Okay, I hope I'm still here. I guess there is a problem in the computer. Hold on one second. Okay. All right, so we're back. Please type in the Y if you can see my screen, because we did have a technical difficulty over here. All right, thumbs is up. Great, so sorry about that. So we're talking about right angle triangles. And a right angle triangle, we have two different right angle triangles. It's the ascending triangle and this is the descending triangle. An ascending triangle is basically rising, and a descending triangle is basically falling. Very, very easy, right? So let's start with the ascending triangle. So let's compare it a little bit with this cake again. So the resistance to the upper boundary of an ascending triangle is flat, as you can see over here. In the chart, we had an uptrend, right? We had an uptrend around up to here. Then the market started going zigzag. And I drew a line from the highs of this pause and connected it to this line from the higher lows of these zigzags. The market is going bam, 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 and the ascending triangle is formed. We have an ascending support, and we have a flat resistance over here. Okay, so an ascending triangle during an uptrend is a bullish formation, right? And even though there are instances of a reversal when the market actually breaks below the ascending support and the market reverses, more often than not, it has proven to be a continuation pattern. And how do we know that? So take a look at the end closer to the tip of this triangle over here. The market is going zigzag, zigzag. They don't know what to do. The bulls and the bears, they're fighting. They're getting less excited. And then the market actually broke out. We had, let me actually choose the pen over here. So we had this bullish market who was trying, this candlestick, to tease above it. Then we have, right after that though, we didn't have a bullish candle. We had a bearish candle. So still, I wouldn't make a decision based on that, right? Okay, every time I erase my, okay, I think I should not use the pen anymore. So anyways, we're right over here. And after the break, after the false breakout, we had still some sort of confusion over here until this candles. So this was an indication the market is going to go up. And a trader who's observing this triangle, this ascending triangle, would be sure about the direction of the market around here and put an entry order around here above 1. You see, I think this is, I assume this is the dollar CAD. So the dollar CAD, so I would put an entry order around 1.005 or something, right? And we were right on the market on the way up. So the pattern was confirmed. We had an opening above the resistance level. The pair broke out of the pause, and the continuation pattern was confirmed. Again, to set your stop and limit, we're going to talk about it later, you want to take profit somewhere around here, which is the same amount from the starting of your triangle, right? So around like 200 pips over here, right? So this is something that I actually forgot to say. So basically, as the market gets closer to the tip around here, one other thing that you want to take a close look at is the volatility. Volatility is basically the market participant. So around here, you can see the market is not moving at all. It's like, I don't know where to go. It's confused, and the volatility, the number of participants, the number of traders actually fall down. And that is what we call the calm before the storm. When the volatility goes down, you can be certain that the market is going to break out and explode in a direction. And that this low volatility usually happens at the tip, right? So then here when the market is basically like it's the calm before the storm, and then the winner, the bulls and the bear, the winner, which in this case was the bull, decides the next direction of the market. And as we again have said before, this resistance level becomes a very important level for our future prices. So resistance is this barrier that it was preventing the market from going up. But now that the market broke out of it, guess what happens to this resistance? Now it becomes a support. So next time the market changes direction, this becomes a key level. And you want to keep an eye on it and basically set your either stop and limit orders or next take profit orders at this level, because this has become a support, right? So as we said before, if a triangle, an ascending triangle, even though it is more often proven to be a continuation, sometimes you have a reversal where the market actually breaks below the ascending support level over here and changes direction. So you really want to be careful. So keep an eye on the market movements and mix and match with other means of analysis before you make a final decision. So next, I have to hurry up a little bit. We have only 15 minutes left. Next, I want to talk about a descending triangle, which is basically the opposite of an ascending triangle. It forms during a downtrend, right? You have a support, which is flat. You have your market going zigzag. It's not even going zigzag here. This pause was resolved pretty rapidly, and you have your descending resistance, and after a confirmation, you see, so around here, this confirmation was, once it kind of broke out from the lower part, from the support, there was a bullish candlestick right over here. So around here is that calm before the storm, that even though it has broken below the support level, the market is still indecisive. So the confirmation didn't come until here. The confirmation is actually this candlestick, this bearish candlestick, and you want to get into the market after the market has broken below the triangle at around 1.05. And then you get into the market, you get into the bearish position and make some pips up until here, right? So very similar to an ascending triangle, but it's a reverse one. The next continuation pattern is the rectangle. This is the celebrity of all pauses, and it happens so often. Right now it's happening in the Aussie dollar, and basically the pause that we talked about, the pause in the trend, is basically going through between two horizontal lines. So the market is going up and down and up and down and up and down, and the support and the resistance are horizontal and they're parallel. It kind of looks like a rectangle, right? So here's a support and here's a resistance. So a rectangle can be both a continuation and a reversal pattern. The reason why I put it over here, and I'm talking about it in this webinar as opposed to reversal pattern, is because it can be both, right? So all you have to do is to wait for a breakout, be aware of a false breakout, and get on the market's new direction or the continued direction. So this is an instance of a rectangle during an uptrend. Let's take a closer look at it, right? So what happened over here is the market confirmed around here. I would wait, even though we had this break above the resistance level, we still had some confusion, right? And the confirmation didn't come until here, right? That we have a very strong bullish candlestick pattern. So I would get into the market around here. This is when my confirmation is out. Obviously, this is if you're trading only based on a rectangle. Obviously, you should not do that, and you should take a look at other technical analysis. I cannot say this enough. You should be listening to the news and what's going on in the world. But only based on the rectangle continuation pattern, I would get into the market around here, right? And go up and make some pips in an uptrend. Another example of a rectangle is when it actually works as a reversal pattern, right? So here, we had a downtrend. Then the market was going up and down and up and down and up and down and up and down. And we formed this resistance. We formed this support level. And when the market was finally able to break out, we had this period of calm before the storm, right? It broke out, but it still wasn't sure until we had this huge bullish candlestick. So I would get into the market about 79 and write up the same amount as the distance between the resistance and the support level of this rectangle pattern. The next very important continuation pattern are the wedges. We have different kinds of wedges, and it is again a pause in the market, and it's very similar to triangles. The difference between a triangle and a wedge is that a triangle, it has a rising you see a rising and a falling line. This is rising and this is falling. A wedge, both lines are either falling or both lines are rising. So this is a falling wedge and this is a rising wedge. A falling wedge also can be a continuation or a reversal pattern, and you have to confirm it exactly the same way you confirm a triangle and a rectangle. Okay? So as you can see, a falling wedge, what a falling wedge has in common, either as a continuation or as a reversal, is that it happens during an uptrend. So you have an uptrend and your zigzag is kind of generally going, slowing down, right? So that is your falling wedge. And then you have two options. The markets have two options. They either go up or they either go down. You gotta wait for the confirmation. Okay? And yes, the wedge does look like a wedge shoe. So any ladies who are trading today with us, they're gonna be very easily be able to identify wedges. So here are some wedges in action, both as reversal and continuation, right? So exactly like the triangles, you identify the wedges after the confirmation. In this one, for example, you set your take profit the same amount as the opening of the wedge around here, right? So this is the confirmation. I think this arrow is a little bit misplaced. It has to be around here. I would get in the market into 0.75 and I would wait for the market to go up to 0.77. That would be my strategy, only based on the wedge, right? Obviously, you should not do that, and you should have other technical analysis as well. And as for the falling wedge during a downtrend, right, that actually turned out to be a reversal pattern. So this is what a falling wedge does. It changes the market into an uptrend. If it happens during an uptrend, more often than not, you have an uptrend. If it happens during a downtrend, more often than not, you have an uptrend because the market is like, I don't know what's going to happen. But again, write it down that you have to wait for the confirmation. Always wait for the confirmation. The confirmation around for this one came around here. Then don't get panicked when the market sometimes goes reverse. If you have your stop and limit calculated properly, you shouldn't be worried because you're not going to lose more money than you can afford, right? So after the continuation pattern, after the falling wedge was confirmed, all you have to do is to wait for the confirmation, and more often than not, you're going to get an uptrend out of it, right? And so this is basically a summary of what we talked about, but we're not going to talk about it again. Next, we have the rising wedge. In the rising wedge, both lines are moving up, but they have a kind of a different angle, right? So this is moving up faster, the higher lows, right? And the lower highs are moving slower. When it happens during a downtrend, it changes the market into a downtrend. When it happens during an uptrend, it changes the market into a downtrend as well, right? So that's what I like to call falling a wedge. I usually like to call it a squeezing factory because the market starts to zigzag in a long, the bigger, it's a bigger volatility over here. But as it gets into the tip of the wedge, it becomes slower, and the zigzags become the zigzags are in a lower range as well, and then the market breaks out to the downside, right? So quickly before we go to the summary, I want to go to the 6 steps that you want to take when you're trading a rising wedge. First, to confirm the pattern. How do you do that? You draw the lines to the zigzags, and then you wait for the market to break out. You're aware of false breaks out, and you don't make a conclusion right after the breakout. You want to make sure about the confirmation if the market is going to continue down or is going to go up, right? And if after the confirmation you placed your entry order, a sell order, below the lower line of the wedge, right around here, and you set your limit order the same distance of the opening of the wedge, which would be right around here, right? Same as the triangle, same as the rectangles. All right, so we were on time. Okay, I'm very happy about that because I did want to get you to the live market as well. So here's a summary. If you want to take a snapshot, here is your opportunity. We talked about symmetrical triangles, which look like a slice of pizza. The markets break out somewhere between half to 3/4 of the triangle, and you have to wait for the confirmation to make sure that it's a continuation pattern. Then we have the ascending triangle, which looks like a rising cake. It has a flat resistance level with an ascending support. And then we have the descending triangle, which looks like a falling cake. It has a descending resistance and a flat support. Then we have the rectangles with a flat resistance and a flat support. And next we have the falling wedge, which has a descending resistance and a descending support with different angles, right? And then we have the rising wedge, which has an ascending resistance and a ascending support, and it usually changes the market into a downtrend, right? And it does look like a wedge in a lady's shoes. It's not summer anymore, so no more wedges out there, but still you can basically go back to your summer spirit once you identify a wedge on your Forex platform. Okay, so I did want to quickly go into the live market and identify some patterns, some of these continuation patterns, and that is why we are going to, oopsie, hold on one second. Okay, not this one, but this one. Okay. So here I have different markets open, right? Let's take a look. Oops. All right, I didn't realize that the screen was not showing. So the screen is showing right now. Yeah. Okay. Great. Thank you for letting me know about it. We are going to take a look at the euro-dollar hourly chart. Okay. So I don't have any other indications over here. I'm going to even get rid of the grids over here. Okay. So right now, around here, I can see that the market is kind of in a pause. You see, we had a downtrend all the way to here. And then right now, it's kind of indecisive, especially around here. Actually, I wonder if I go to a more micro time frame, what we're going to see. You see, we definitely can see indecisiveness. Okay, but I do want to go back to an hourly chart because I did see a pattern today. So right around here, I'm going to go ahead and draw my lines, right? So I'm going to connect the lower highs. You see the tops of the market. And then I'm going to connect the higher lows. I believe that this pause started around here because we have these many zigzags over here. So let's see what this pattern is going to give us. I'm going to I'm going to connect the higher lows of the market. All right, so it's still not reaching. All right, what do you think this is going to turn out to be? We have a descending in an ascending line, right? So this is our descending. This is our descending resistance level, and this one is our ascending support level. If you continue dragging it up, you can see that, hey, guess what? This is actually a triangle, right? This is not exactly a symmetrical triangle. It's kind of leaning towards down. We don't have a flat one, but I would like to look at it as a ascending triangle, because you see the angle of the support is actually higher. So my prediction for this is that you can see, so the market still has not broken below, all right, and we were on an overall downtrend, right? So after this pause, and just by the way, there are so many different ways of drawing triangles or drawing patterns on the Forex market. So a different person who didn't see this one might have seen this one, for example. If you drag this higher low, you can say that, oh, I think the market, the triangle started around here. For me, I want to have my starting point a little bit more over here, because I still think that this was still in the downtrend. This was still a part of the downtrend, and the pause actually started over here. There are different ways of drawing it. So right now, I still don't know if the market is going to break above or below it. Usually, normally, we haven't talked about this. I would add other indicators. Let's say, for example, the Ichimoku cloud, which shows you a direction. Hey, by the way, take a look at this. The market, even adding the Ichimoku cloud, you can see that the market is indeed consolidating, and we don't know if the market is going to break above or below it. So for this, within this day, within the coming hours, we have to wait for a breakout. If it doesn't break out, we are going to continue and change and modify our triangle. If it still goes like this and we don't see a breakout, then we have no choice to modify it. But if the market does break out, let's say from the lower boundary, from this ascending support level of the triangle somewhere around here, and confirm it, then we're going to have a bearish movement. Probably, I would say, if I confirm a breakout out of this triangle, I would set my first limit order, a bearish take profit order around here at 123.59. So if the market breaks out around here, right, I would get into the market around 124 and make some pips until I hit this support level, right? Because it is the bottom of the previous trend, and it is the same amount from the the opening apex of the triangle, and it does make sense. If you want to become have a better view of it, you want to go into different time frames. But right now, the possibility of this market, our first target would be somewhere around here, and if it breaks below that, then we're going to have a different story. So as you can see, we successfully identified the triangle, and all we have to do is to wait and see. Oh, by the way, look at this. Right now, this new candle for this hour has started to form, and it opened. It's a bearish candle. Do you see this one? Yeah, so chances are that this market is going to break below this ascending support, and we are going to have a trade. So stay tuned after this webinar for sure, and do let me know if you made pips. I am going to show our Orbix platform one more time. If you have any questions, our webinar is over, but if you have any questions, if you didn't have a chance to ask your questions, definitely shoot us an email at info@orbix.com, or send an email to me personally at kiana@investdiva.com, and we will answer your questions. Trade responsibly, and thank you so much for watching today's webinar.